Today, very good time to check in with our economic expert, whom you know is Larry Kudlow, the host of CNBC's Primetime Kudlow Report, which you can find at 7 to 8 Eastern Standard Time. And, of course, you can listen to him right here every Saturday for the Larry Kudlow Show, which airs on WMAL at 7 p.m. on Saturday. Larry, good morning.
Good morning. Good morning.
Okay, before we get to the macro stuff, it's clear the economy has turned around if your name is Arianna Huffington. Would you have made that deal if you were at AOL? Would you have bought the Huffington Post for $314 million?
No.
All right. Why do you suppose they did? What did they get from this, or is this another Time Warner thing?
I think they've lost their minds.
Okay.
I think they've lost their corporate minds. I mean, I don't know a lot of details about this, but from what I read yesterday, we didn't report in this story, but what I read is that first of all, the price is vastly too high.
32 times earnings before interest, taxes, and depreciation.
And secondly, apart from the fact that the HuffPost is a left-wing website, and you have to ask what's the future of that, but in terms of the numbers, I don't see what the business model is. In other words, is there sufficient advertising to carry this thing into profitability? That's the question that analysts are asking, analysts that know more about these things than I do. I don't see what the business model is, and I think AOL is a dying system, so it just doesn't make a lot of sense. But again, I did not put a sharp pencil to this.
Right. That's what we were talking about yesterday. I didn't even think AOL had that kind of money.
And if they did, they probably should go out and buy a mutual stock fund.
Right.
Apparently, they said they spent 40% of their cash. Who knew they had cash?
Yeah, it was more of a cash deal than anything else.
I mean, it's funny, when the news hit the wire, I said I didn't even know AOL was still around. I'd forgotten about AOL, so I don't know what to say.
All right. What did you make of the president's speech yesterday in front of the Chamber of Commerce?
You know, it's funny that the word that comes to mind is pedantic. Pedantic. I think he was lecturing business, and I don't think it went over well. What did I read? He had 2 rounds of applause in a 35-minute speech.
Right.
And almost to the point where it's like he doesn't really want to do that, what he did yesterday, but he did it because he knows he has to do it because he got whooped last November, and Bill Daley and his other advisors are telling him to keep the charm offensive going with business. So I don't think he wants to do this at all. I don't think his heart was in it. Though his tone was, downbeat. And, on specific matters, I think what those guys really wanted to hear was that he's going to put a freeze or a moratorium on all new regulations, period.
And he's not going to do that, though.
Because he's, half the time he said, I want to streamline regulations. The other half, he said, regulations are really good for you. You just don't know why they're good, but they're really good for you. Take my advice. And I don't think business believes that. I know I don't believe that. And right now, business is faced with a whole bunch of new regs. Most importantly, everything to do with Obamacare, which are all job blockers, job destroyers. But also the EPA regulations, the financial regulations, a whole bunch of financial regulations. Not the stuff about bank capital, but financial regulations that have to do with executive compensation rules, this ratio you're supposed to show between what your executives make relative to the rest of your workforce, which I think is just class warfare stuff. That stuff should be fixed. The proxy access stuff should be fixed, making it easier for unions to put boards, slates up for boards of directors. I mean, there's just a whole bunch of these things. The EPA, I don't know if I said that, but that's certainly one of the biggest obstacles right now.
Well,
why not have a 3-year moratorium on all new regulations? It would be like a tax cut.
What would his liberal base do if he did that, though?
Well, look, his liberal base is not going to reelect him. It's his middle base that's going to elect him. And to the extent that it all hinges on the economy, I mean, I think that the economy is clearly getting better, and businesses have worked very hard to downsize and, get liquid, get efficient. They're starting to come around. They're starting to invest. But regulations are like taxes. They're obstacles to growth. And I think the other point about Obama is that, he did once again mention corporate tax reform. I really think it's about time we put some numbers on the scoreboard. What tax rate will we pay? Are we going to be competitive with a 25% rate or at 20% rate, or like Canada, which is creating massive amounts of jobs, unlike us, which has, a 15 or 16% rate? Mm-hmm. Or is corporate tax reform going to lower the rate to, say, 30%, which is barely better than it is now, but it's going to have a lot of tax increases for companies? Is that where we're going to go on this? He didn't answer any of that stuff, and I think that's why I had such a lousy reception from business.
All right, let's talk about the economy for a second. I'm curious to get your education on this matter. Why the stock market continues to go up? I mean, we're over 12,000. NASDAQ is almost at an 11-year high. Unemployment, though, is still very high. Why is the stock market doing well despite oil being, close to $100 a barrel, worried about Egypt? Stock market goes up, jobs aren't being created. What's going on?
Well, I wouldn't link jobs to stocks. I think a lot of people make that mistake. But, stocks are all about profits. Profits are the mother's milk of the stock market. And this whole rally, going back to March of 2009, and you're close to doubling now from the old lows.
Right.
This thing is based on the expectation that future profits are going to continue to rise. Profits are the mother's milk of the stock market, and for that matter, the whole economy. And profits have been great, and they've come in for the fourth quarter very, very strong, about 35% year on year. And also top-line revenues have done rather well, and there's a lot of leverage. These companies are so lean and mean now that they can turn a dollar into revenues into $3, $4, $5 of profit.
Well, when will profits lead to growth, lead to job creation?
Well, that's the interesting linkage, and that should have happened. You see, that should have already happened, and certainly we saw this. A lot of comparisons with Ronald Reagan, Obama and Reagan. When you look at the numbers, Reagan had tremendous job creation in the first 2 years of his recovery. President Obama is not getting that. So I think, personally, it's because businesses are not willing to make future investments in people. They're just not willing to do the job. A firm doesn't hire somebody for 6 or 12 months. They want to hire somebody for 5 or 10 years minimum. And I think they're worried about the cost. And I do believe that has a lot to do with these regulatory and tax threats from Obamacare. I still think that hangs over the jobs market. Some people may disagree with that, but that is my take. Firms are profitable enough. Now, they are investing. Their capital investments are doing very well. When you look at the data on that, they're running about 15% year on year, but they're not getting the hires. Now, there's a lot of temporary hires.
Yeah.
And if you think about what I'm saying, it doesn't make sense that they'd stay short-term and hire temps rather than invest in 5 or 10-year permanent hires. That stuff. So I think that does go to Washington policies. Now, I think jobs are going to get better because the economy's outlook is getting better, and the outlook was, something of a deterrent. But to me, a freeze on regulations and a little clarity on the corporate tax would